Hello guys, Tim here. Welcome to this YouTube video, and today I'm going to talk about some of the adjustments that I personally made for multi-day runners, especially in 2020. And first of all, I want to thank you for you guys that came to the conference. During this conference, we call a live trade on ATHE. Hopefully you guys made money by the end of the day. I shorted very small at 320. No, 335. Sorry. Planning to add it, but this is the opportunity I can take. We definitely took some profits partially, and the conference ended there. So if you guys have any questions about this ticker, you guys can leave a comment below, and let's get into the video. So for the multi-day pattern adjustments, I want to make in total of 3 points. First of all, when you are looking at a multi-day runner pattern, you want to look at the initial market cap. Because if you start buying a $1 billion cap, it's not going to go that high. It's not going to have the potential to spike to 300%. But if you're looking at a market cap that is under 100 million initially, then you will have a much better chance to get much better reward compared to buying something like a $1 billion cap. So the second point I want to make will be reference to the chart that we had on CBAT and SOLO. Those two charts have the secondary breakout. Now, secondary breakout is completely different story compared to the first breakout. So we will talk about how secondary breakout is not as strong compared to the first one, and also what's the correlation between the first and the secondary breakout as well. So the third point, I want to talk about volume prediction, which I specifically taught in Doxinator and also trading technique as well. Volume prediction is very important. I'm going to introduce the concept behind it and how to really spot a breakout before the market even open, and you will have much better winning percentage to trade in this multi-day breakout pattern. So today we're going to talk about two tickers, CBAT and SOLO. Both of them are very similar chart. You can look at the historical chart of 2 years. You have around 200 million support between 4 to 5. Then you have 200 million support around 6. So on both of the chart, you can see that it looks pretty much identical, but there's one thing that's completely different is the initial market cap. As I said, the higher the initial market cap is, the more difficult for stock to go up. Whenever the stock's initial market cap exceed over 500 million, it's not going to be very profitable, especially on the way up. So in terms of risk reward, higher market cap generally have lower risk, but especially when you are looking for much bigger reward on multi-day breakout, smaller initial market cap works the best. So in this case, SOLO compared to CBAT, you can kind of see that SOLO has much lower market cap compared to CBAT. So in terms of risk reward, SOLO actually have a much better reward. Now, if we're not taking any type of criteria, SOLO actually have much better reward compared to CBAT. In this case, CBAT started with much higher market cap, but in actual chart, CBAT extended much further than SOLO. So in terms of charting, let's look at the specific chart itself. Well, first of all, let's start with CBAT. Initially, stock went from 0.1 to 4, and it had its first break through this 100 or 200 million support. And the first extension is only about 20%, and that's considered a completely fake out. And the secondary breakout started around 5. It went all the way up to 11. Normally, that secondary breakout is correlated with first breakout. If the first breakout is really strong, then the secondary breakout is going to be strong as well. In this case, CBAT actually have much stronger or strength compared to the first one. So CBAT is definitely an outlier, just according to all of the statistics that I have tracked for multi-day runner. Second ticker we can look at is first breakout for SOLO started around 309 all the way to 6. Now they consolidated much longer than CBAT. Then the secondary breakout extended only about 20%. So in terms of breakout level, CBAT is definitely an outlier, and they extended much longer and further. So let's look at other criteria that might fit in and actually can explain why CBAT ran much further compared to SOLO. So let's look at in terms of volume. This is the main criteria that we want to look for, especially when we're looking at a breakout. So the first day of the breakout actually traded only about 90 million volume. Now compared to solo, first the breakout volume traded around 40 million. So the more volume you can trade in one day, then for the second day liquidity, which is volume, has to surpass the first day. For CBAT, that the second day did surpass the first day, but it still traded around 100 million. But you can see solo that traded 160 million. So to extend to the next day, that solo needs to trade more than 160 million shares on the next day, which is very unlikely. And on CBAT, well, you only traded 100 million shares, so it's much lower volume compared to solo, and that will bring more odds for spiking a little bit further compared to the solo ticker. So when you are looking at overall multi-day breakout patterns, the first green day cannot have that much volume, because the more volume it has, then the next day liquidity or volume, it's going to be very difficult for the stock to extend even more. So let's go over all of the three criteria. First of all, that you want a really low initial market caps, so the stock itself have much potential to extend. Now the second point you want to look at is the first breakout and secondary breakout. Well, normally you want to see that there is a lot of extensions on first breakout, so the secondary breakout can be as good as the first one. Because when you are looking at in terms of the second criteria, the psychology behind it is when somebody wants to buy a breakout, that they want to see, okay, this ticker had a decent history of breakout. So in the next breakout, the ticker itself will give them much more confidence to hold longer and buy more shares on the second breakout. So the third criteria will be volume and liquidity. Make sure that the first day on the breakout, do not trade the maximum volume can be traded in a day. Then the next day there will be no liquidity can be traded on the next day. So if it's trading decent amount of volume, somewhere like 40 million to 60 million, it's very ideal. But if it trades over 200, 300 million, it is pretty much impossible for the next day to exceed the previous day liquidity. So that will be overall three of the criteria you want to look for and some of the adjustments that I made for 2020. And thank you very much for watching this video, and I will see you guys next time.